You have the centralized world versus the decentralized world. When the middle class kind of gets slowly eaten up, you end up choosing one of two sides. You either have to go to a private company that's not profitable and then you get paid less and you're basically taking a flyer on your equity, or you go work at a mega corporation that's squeezing the middle class and offering them debt. Be careful how you get rich. The heroes of this generation are the villains of the next. As soon as the boomers get out of these power positions in politics, it's going to be really interesting. Now you get people coming in and just saying, F this, globalization has failed.
Yeah, the narrative needs to be refreshed, right? The story from World War II, it's done, right? We need a new story, and that will hopefully unite us into a brighter future.
What I've tried to find in my career, how do you align your incentives as a citizen, as a father, and also look at yourself in the mirror making money? It's harder to do. The biggest piece of advice that I could have given myself 20 years ago is...
Hello, everyone, and welcome back to the Bitcoin News channel. I'm your host, Rob Wallace, and today I'm very grateful to be joined by Tyler Neville, a veteran trader currently at Muddy Waters Capital with over 20 years of market experience. He's also the co-host of one of the most wildly successful finance podcasts out there, Forward Guidance. Tyler, how are you doing today?
What's up, Rob? How's it going?
Doing well. Markets are crazy. And I've followed you for a couple of months now, just popped up on my radar, and I really love your social commentary. So before we get into Bitcoin, macro, Davos, everything, I want to ask you this question. You trade for a living, but you're also sort of a cultural anthropologist. When you look at the current outlook in 2026, what do you think is the most misunderstood subject by smart people out there?
Oh, geez. I mean, the whole premise of investing has just completely gotten warped, where you used to want to invest where everyone is not investing and find ideas that people think will be great in the future. It's like, you want to agree with me later, but now you get this formulaic sausage machine of 401ks that say, you should invest in the S&P, you should invest in the QQQ, and it's doing every single thing that everyone else is doing. And that therein lies it's inverse of the actual premise of investing. You want to be where people aren't and then have everyone agree with you later. So that whole thing has just been completely skewed upside down. And therein lies the problem of centralization, because now the whole system is geared towards just forcing money into these target date funds so that these giant mega corporations lower their cost of capital, and then it doesn't end up going to innovation. So therein lies the big issue.
Yeah, and it makes it much more fragile, right? If everybody is all in one place, then if that goes belly up, then everybody's out of luck.
Well, in one way it's fragile, but then in another, it's super stable. You're really centralized, but you're backed. At the end of the day, you have these crazy dips that are eventually backed out. The government backs it and they bail out. They continuously been bailing things out for 17 years. Because it's so centralized. So in one way, it's you see the volatility in bonds and stocks is just at record lows over time. Credit spreads are at record lows. That's all just because the government has essentially backstopped the 401k pension endowment system. So that's stable, but the social contract, when you try to stultify volatility in asset prices for a long enough period of time, you get volatility in the social contract, which is, I think, what you're referring to as me being an anthropologist, is we're seeing it seep into the politics, and now things are kind of tearing themselves apart.
Yeah, and as we see things tear themselves apart, that is one of the big reasons that many of us got into Bitcoin. So you've been in the markets for 20 years. When did Bitcoin get on your radar, and when did you consider yourself a maxi?
Oh, geez, let's see. In 2014, 2015, I started, well, actually, it's even earlier than that. This is hilarious. When I was at my hedge fund in 2013 or something, I had an intern from MIT who I won't name his name, but he goes, "Hey, Tyler, have you heard about this Bitcoin thing?" He goes, "I'm mining it on my laptop." And I was at this hedge fund in Boston at the time, and he was mining all this Bitcoin by himself. And I was like, "Oh, you have magic internet money, you moron." And then 3 or 4 years later, I was like, "Hey, tell me about that thing that you he was like, they solved the Byzantine general's equation, and this is super smart. This kid was way smarter than me, and he was my intern. And then, of course, now he's like super successful and ruling the world. But but that's what I was first tipped onto it. And then from a macro perspective, one of my mentors in the business, this guy Mark Hart, he ran this company called Corriente Capital. He made money off shorting the subprime crisis in 2008, buying credit default swaps on European debt in like 2010 before that blew out. So, and then in 2014 or 15, he started talking about this, new reserve currency essentially. And he was one of the first macro guys to essentially let it be known that like it was okay as a macro investor at a hedge fund to buy Bitcoin. And so he was actually the first person, I think, that did the GBTC arbitrage. And so that was the hardest part about buying Bitcoin at the time, was finding a way you could do it institutionally. And so he kind of hacked that and did that in like 2014, 2015. I ended up working for him a couple of years later. But that was the inception. And his equation was if you take productivity and then inflation. So say productivity is 2% every year and inflation, say 3% every year. And you are sitting in cash, right? So you're paying a 2% productivity tax because if you have a $100 basket of goods at the end of the year, that becomes a $98 basket of goods. If you have a $100 basket of goods and that inflation at the end of the year becomes $103. So it's pretty simple, but there's a 5% delta if you just sit in cash. Meaning like that's the tax you pay to the issuer of the sovereign currency, is that 5%. And so that 5% was so wide. So sitting in cash was so stupid that he was trying to find ways to put your money in a reserve, right? Like in a reserve collateral. And so that's Mark essentially, found that from a macro perspective. And I call him the inceptor of things because he sees it like 2 or 3 years before everybody else. And so he made it okay, I thought, for all the other hedge fund guys to jump on the boat and invest in Bitcoin. So so sorry, it was long-winded, but hopefully that made sense.
So that right there is the debasement trade, right?
Yes, he was on it way before that. And this was coming from the guy. He saw the subprime crisis, and then therein afterwards saw the government intervention. And another one of his big macro things was China has a closed capital account, and this is probably getting to, I don't know how super
go for it
they are, but in 2015, 2016, one of the theses for Bitcoin was the Chinese citizens need to get their money out because there's this giant real estate bubble. And the way they were doing that was they were actually investing in Bitcoin because that's their out. It's like, if there was this giant delevering 2008 type of event in Chinese real estate, then they would try to get into gold and Bitcoin, get their money out of the system in China. And Mark was thinking China was going to implode. What he didn't actually take into account was China has such a chokehold on their capital controls. They ended up actually being able to contain that diaspora of capital. And then they locked down, investing in Bitcoin. Mm-hmm. They locked down the Bitcoin miners. And so these are all just giant geopolitical moves that have happened throughout, the last 15 years. But Bitcoin keeps rising, even though in the face of all that, because there's really no other way out besides, printing currency and diluting the debt that you gave the next generation. So that's does that answer your question?
Yeah. And so did you have that thesis throughout your trading career? Did you know from the very beginning the only way out is inflation and that we got to find alternatives, or was that an eye-opening moment for you at some point?
Yeah. Well, initially I knew something was really messed up after 2008. I was living in this, I was at a hedge fund down in Miami, and I was living in a high-rise apartment. It was in Brickell, which is like now completely full, but brand new high-rise apartments. I was overlooking the water with a pool on my roof deck, brand new gym for $600 a month, furnished. And I was like, all these banks that in Miami were going under, and I'm like, how the hell are they going to basically fill up these buildings. And they were auctioning them off for like $25K a pop for 1-bedroom apartments. No one had money at the time in 2008. And all of a sudden they came in and they just, they did TARP and they did, lowered interest rates to zero. And they did all this stuff. And from that point on, I was like, oh, they can literally just create inflation with paper tickets. And we've literally been on that prescription since that point. And it's what it is just a giant wealth transfer from people with assets to, from the middle class who's working really hard and doesn't actually invest in them. So that's where I really saw it, was in 2008. And then I moved to a fund in Boston that did a lot of natural resources. And I was like, I got the government. I'm going to stay one step ahead of the government, and I'm going to invest. I'm going to go work at a gold fund. And so we were long all these like gold stocks from like 2010 to 2014. But what happened was the productivity of all the tech companies was so good, and they were basically stealing all the capital. And the metals and mining complex was over-levered. They were really poorly run. They were trying to just produce as much gold and silver as possible. And so you saw, the gold price kind of spiked in the early 2010s. It was like 2013, I think, and then imploded because it was essentially like a levered bubble. And you oversupplied the market with gold. And then it went into like a 15-year bear market, which we're just coming out of. But in replace of that, Bitcoin really always stayed in my mind because of the supply issue, right? Like you couldn't over-lever it. You might get retail over-levering themselves, or, the investors inside, you'd have these little crises like we saw in 2020 and where it goes through these dips. And that's largely a function of, deflation from the government side. So when that happens, everyone delevers their debts and, Bitcoin takes a digger, but the supply dynamics don't change. Like over time, they get tighter and tighter. So, and we'll see if that plays out. There's a lot of quantum computing worries. I think that's just hype for now, and they'll figure out a way to change it. But so that is really kind of what led me to Bitcoin.
And so that brings us to the present. And I saw some of your posts from the end of 25, a couple of weeks ago, where you said, all right, this tax harvesting is over. 2026 is going to be a fresh start for Bitcoin. And we started off pretty hot. We ran up to 97, but now we're back down to 88, right? So what is going on here? Do we have hope for a new all-time high this year?
Yeah, I think so. I don't like to make predictions because like the world is very complex. You have a lot of geopolitical things are battling right now. You have, the centralized world versus the decentralized world. You have the centralized banking cartel versus crypto. And a lot of these things I think will play themselves out in 2026. And it looks like, Trump's aware of it, which is he wants a more decentralized world. I think he just sued JP Morgan for like $5 billion for blacklisting him. This is where the battlefield is fought now, generationally, because you've essentially the banking system has squeezed the middle class so much that they can't squeeze them anymore. And I think Trump and the administration, like, I'm not like super political, but there's one thing he was realizing is that you need a very decentralized holding base if you want innovation and that American dynamism. You can't have everything owned by institutions. That's why he's doing the housing policy. That's why he's trying to like take a little power away from the banks. When you financialize everything, what I say is like JP Morgan doesn't care about giving me Tyler Neville a loan. They want to go give OpenAI a loan. They want to give Facebook a loan because my incremental loan doesn't really matter to them. They're so big, their earnings only matter when they do businesses with big counterparties. So they want all the centralized players to get way bigger and bigger and bigger and bigger. And then, but the problem is that when you get so centralized, the power structures are so like incestuous that you can't, when the middle class kind of gets kind of slowly eaten up, you end up choosing like one of two sides, and you lose the dynamism in the economy, you lose the innovation, and then it just becomes this weird, I guess you could say we're becoming more like China in terms of like where you innovate in the fiscal plans and where you push innovation. And so that's why, I've been really bullish on the frontiers, I call it, is because we're short nominal growth to pay off all the debts. We need nominal growth to go up a lot higher so that our system still functions. And that's essentially what Trump is doing. Now, I think Bitcoin sits in the middle of that, all these different incentives. And so you've had a lot of, I'd say tax law selling, but you had a lot of OG selling, I guess. You had a lot of you have a lot of different counterparties that like Jane Street, Citadel, they can kind of control when there's not new entrants into the marketplace, when the buyers and sellers just kind of stay the same, they can kind of control the volatility. And it's just kind of stayed in a band. And that's generally what's happened. We did almost break out to a new high. And I think that was stultified by a lot of the centralized cartel of asset management. But what I think changes it, how we used to value Bitcoin was, how do you value artwork or anything, right? You have to look at the access. Can people buy it? The awareness, how many people know about it? The custody, can you hold it securely? Does it have patina? Like, how do people look at a Michelangelo painting and say, oh, I want to have that? The potential for price appreciation. And then the last thing is use of collateral. Can you borrow against it? So we're seeing as those get unlocked, you see a price improvement. Like you could actually use this for anything, like a grand piano, and anything that should have value for a buyer and seller in a marketplace. When you have access, awareness, custody, patina, and use as collateral, you can borrow against it. That usually unlocks like a parabolic move in an asset. Mm-hmm. And so the problem now is, I think, is access, where you need legislation to open up a whole new pile of buyers, because you had, and the Venezuela move was kind of interesting because they are a big owner of, cryptocurrency. It's a big, and so what you did was you essentially went from, the centralized chokehold of control to a more decentralized, where it's okay to own Bitcoin now. You can actually have control of that sovereignty in a way. And so you're trying to bring more people into that decentralized world, instead of just, the Russia, China led, more, I guess, chokehold, closed capital system. Mm-hmm. And that's playing out in 2026 geopolitically.
And so we saw Bitcoin be birthed out of the financial crisis, of course, and it was a rebellious asset, right? Something outside of the system that allowed you to opt out. And now it's being adopted by Larry Fink and Wall Street. So from your perspective, talking to traders and people who are moving lots of money, where does it sit now? Is it still a opt-out asset, or is it being co-opted by the forces that be?
Yeah, I mean, I think you have to keep I'm not dogmatic about it. I've been mega bullish Bitcoin. Right now, I want to see a couple more cards come out of the deck, because it's potentially could be co-opted. Like, it's clearly detached from what it should be doing, what gold and silver is doing, from a philosophical standpoint. But there's forces not cooperating. We still don't know what it is. Is it the quantum computing threat? Is this China and Russia unloading early supply that they mine just for the case? Because China and Russia really want a gold-backed world, and we want a decentralized crypto-backed world. I think that's what, the battle that's really happening. And I don't know who's going to win, but the other thing to keep in mind is, like, if you think about AI and the centralization of AI, Peter Thiel says AI is communist, crypto is capitalist. And as more capital goes to AI, that's less incremental dollars. When there's more, it's kind of what happened with like software stocks from 2010. They took off while gold mining stocks got crushed. The use case of crypto is not really there besides Bitcoin, in my opinion. And so a lot of the early capital that came in is like dying, and they over levered it. They told these great stories about cash flow, yada, yada, yada. It didn't come to fruition. And so people are nervous about pushing capital institutionally back into crypto. And I think there needs to be, whether it's this bill needs to be more crypto friendly, less bank friendly, there needs to be a catalyst for something to change. And I think we're seeing that play out.
I wanted to briefly interrupt today's interview to give a big shout out to our lead sponsor, Rhino Bitcoin. Rhino is the all-in-one Bitcoin super app built by Bitcoiners for Bitcoiners. Buy or sell instantly. Send sats anywhere on the Lightning Network. Withdraw straight to cold storage. Even turn sats into gift cards or link to a Casa multisig, all within one sleek interface. And Rhino is just warming up. Soon, you'll pay bills, borrow against your Bitcoin, and save for retirement, all without leaving the app. Download Rhino at rhinobitcoin.com or tap the link in the description below. Use promo code Bitcoin News and Rhino will drop you $10 of free Bitcoin into your account today. Secure your stack with Rhino Bitcoin and enjoy the rest of the video.
The other thing is as these Bitcoin miners have a lot of electricity, and we're seeing the use case for AI become better and better, and these models are getting better and better, and they're actually taking some of the electrical capacity away from the Bitcoin miners and they're selling it to the AI hyperscalers. That's actually an existential battle, right? Okay, the economics are way better for AI scaling rather than Bitcoin. So your OG Bitcoin miners are moving away because there's better economics over here. That might swing back if you get an unlock or spot prices rise. And then I think that's the main battle for the next 5 years, is where the electrical prices kind of drive things. And that's important to watch from a crypto battle standpoint. But I think in the end, I think it works if you're going to put me on. But I'm open to being wrong, and maybe we're in a massive productivity boom and AI works, and I don't even have to work anymore. I have UBI and they pay us. What's the point if productivity goes up 500% this year? The point is that equation with productivity and inflation's dropping, then the use case of Bitcoin doesn't make as much sense. So I'm open to that, but I think you're more likely to get governments printing, doing what, gold and silver are clearly telling us something's messed up in the system. People are looking for reserve collateral. So, but those are the two alternatives. You either have a productivity boom that's so ridiculous, space companies work, robotics work, we don't need a store of value. You're just going to be so productive buying all these new frontier tech things. Or the alternative is we're just stuck in the muck of bureaucracy, and Bitcoin keeps working, and crypto has another advancement. They figure out use cases. They figure out how to do a new banking bill where we're not banking with Bank of America or JP Morgan anymore, which no one really likes. They figure out a way to offer crypto banks and stablecoin yield, and all those deposits change. That's how I'm envisioning the future. But to make a super call right now, I'd love to see a couple more. And I think it's going to be a legislation thing. Once you get Brian Armstrong, and Robinhood, if they can get crypto, this crypto legislation passed for more decentralized world, that might actually nudge things to new highs.
Yeah, we've got two visions of the world: one, luxury techno communism, or cypherpunk libertarianism. Take your pick, right?
Exactly. I don't know. Call me crazy, but after the last 15 years, I love to think that AI solves everything. We live 50 years longer. We're so productive. All these giant corporations get crumbled because you and I can run, our each corporation. There's new economies that open up. I'd love to believe that's the case, but knowing, the last 15 years of large big cap tech, I don't think that's the case. It's more like some weird Hunger Games dystopia where you even see it in the art, the Running Man. I don't know if you've watched this, art mimics life, where you annihilate the middle class, then everyone's got to do crazy games. We got to entertain ourselves all the time. Mr. Beast, Hunger Games. Yeah. that's what we're living through in a weird way. No one really realizes it, but that's, we're glued to screens all the time. And in the end, like that's more likely the outcome. I think if you get a massive productivity boom in AI is like those, usually when you get wealthy enough, it's like heavy lies the crown and these guys turn into real creeps and then, want to see entertaining things. Yeah.
It's a weird world. Yes, absolutely.
Going down a rabbit hole. Get the cane out.
Yeah, let's bring it back to the present moment. And what you said, we are living in the, I guess, World Series of macro is what you described it as, right? And as somebody, I studied international relations, and that's what sort of got me into the world of money and how this all works. And then I eventually found Austrian economics, and that led me to Bitcoin, right? But this geopolitics still fascinates me. And so we've got Venezuela, we've got Iran, we've got Greenland, we've got America breaking off from the EU and our NATO allies. As somebody who manages money and looks at the world from these giant risk board pieces, what are you seeing right now? Do you think this is a real threat of the old world fracturing right before our very eyes?
Oh, no doubt. I mean, I think this is like the Neil Howe fourth turning, seventh inning, eighth inning, where you just got Howard Lutnick getting heckled by Al Gore at the World Economic Forum. And then, all these guys, they'd go to Davos for like 10 years and everyone could whisper between their breath, oh, they're going on private planes and, telling us how to live and everyone's going to rent and be happy. And now you get people coming in and just saying like, F this, it's not working. Globalization has failed. There was a, I think he was like a IMF guy that had worked there for 40 years. Angus something that came out recently, and he said, "Oh, I was wrong about globalization. It doesn't really work that well." and at the extremes, I do think globalization worked to a certain extent, but like anything done in scale for 40 years, you're going to have some side effects. I'm not against a lot of that stuff when it lowers the cost and makes things better, but like when you start tearing apart the social contract and bailing out, they bail out the mega corporations and then, no one else gets a bailout on the small scale. It's like I take out a loan, I actually got to pay it back. Silicon Valley Bank takes out a loan. The CEO pays himself $1 gazillion and then gets bailed out and gets bought. He's fine. Then he gets another job. So like there's really that whole thing, I think, is coming to an end. And good old fashioned shame is going to start coming back. Like a lot of what we do at Muddy Waters, on the activist short side, we also have gold strategy and a couple other strategies. But on the short side, we find corrupt, fraudulent companies that are doing nefarious things. And I think that whole thing, the Nick Shirley fraud stuff, that runs rampant when you print money for 17 years. You don't realize how much we like, if you look at that M2, it's a hockey stick up and to the right. And when that happens and you keep continuously bailing out these like old corporations, think about it. Like all the bureaucrats, they're getting kickbacks. They're doing all sorts of weird stuff. Recessions used to just clean house, but we haven't been able to have one because you have the monetary policy push, then the fiscal push. Because at this point, if you were allowed a recession, who knows what would happen? I mean, God, I don't even know. The debts are so much bigger and it's scary. And then you have the boomers that are aging. They're clearly not going. They're going to vote for a bailout at, a minus 10% pullback. So I call it, why America or a Ponzi scheme at this point. So it's just, that's where we're at in America. It's a sad state of affairs.
Yeah, and it seems like America realizes that something radical needs to happen, right? And while we still are in pole position, we need to make some really drastic moves so that we can try to carve out a new spot in this radical future that we see ahead of us. And when we look at the America and China relationship, you could say that America got the benefit of it, or you could say that China did. But at the end of the day, they're both in pretty precarious positions when you look at demographics and the state of the modern economy in each. And so if you had to say who won that trade, America or China, over the last 35, 40 years?
Geez, that's a tough one. I mean, both American aristocrats and Chinese aristocrats, I think, won. And that's a funny thing to me. It's like the battle, we've what's the word, obfuscated the real battle, which is it's never been political. It's never been left or right. It's really a social clash issue, but they make it left or right to distract us from the fact that it's a social hierarchy, right? Like they give us, the moral high ground on a lot of policies on the left, and then, on the right, they've pulled it's like that shaking the red ants with the blue ants. Like that's what's going on. But, all the people at the top that are just milking the rest of us, that's really what it is. And don't get me wrong, I love innovation. I just love free market capitalism. That's where I'm at. Like I would love to actually live in a free market where things can actually fall and you get hurt if you take too much risk. That's so who wins in China? I think you could say China has won from a manufacturing perspective. Like they've infiltrated a lot of global manufacturing supply chains. Like if their parts are in all of our stuff, we can't function. So like, how do you build weapons? How do you build ships? This whole, I'm a layman's geopolitical analyst, but they've made us fat and happy with exports. And if they can, the problem is like, I think no one really trusts them on the currency basis. So like to get on a yuan backed gold, gold backed yuan, it's going to be really hard. So that unwinding all that stuff is just really hard. So will we bring more of a manufacturing base here? I think that's the next big push here is you're going to get a lot of government incentives. You're already seeing it with like Taiwan Semi coming here. Arizona's become a semiconductor like hub. All the defense, like Palmer Luckey, they're now producing and getting lots of incentives to make defense stuff here. And I think it'll unwind in a good way. The one thing America has is like the greatest capital market funding. Hopefully that doesn't change. But there is money. What Trump has been good at is getting international money to invest here, and essentially rewriting like the global rule book for, you're breaking apart all these different capital supply chains, not just trade supply chains, and getting money in here to invest in future infrastructure. So now the next big thing is just how do you deregulate so you can build the stuff? Mm-hmm. So yeah. I don't know, maybe that works, but right now I'd say China's probably on better footing, but it's really hard, when you innovate, you can't innovate from the top down. Mm. Innovation comes from like a lot of different counterparties interacting and sharing ideas. It's not like you need to build this and you need to figure it out. Like that's really hard to do. And there's something about the American, I think, who was the French philosopher said he came to America and he was just like, this is the most incredible thing.
Tocqueville. Yeah.
Tocqueville. Yeah. Where he's just like, this is how you innovate and through decentralization. So if we can get to that point and you have, I think the US will be okay. But you need the political will. And I hope we don't tear the social contract apart before then.
Yeah, and that's one thing I've heard you bring up a bunch recently is how like you obviously believe in free markets and that those who fail should be allowed to fail and not bailed out. But you also are very clear that like, hey, if this goes too far, things are just going to fall apart, right? You particularly called out like Bill Ackman, who said that if the credit cards don't get their 32% APR, then they're going to be screwed and the rich people won't have their free points. So yeah, like how do we balance that?
Jeez, I mean, that's what's really hard is there's a guy, Kirill Sokolov, he talks about the movement of, from capital to labor. And you have to bear some inflationary impulses when you move from just concentrating on capital to labor. And there probably will be, some inflation, but there might be some growth too. Like if people actually get paid for their work and you get way more productivity out of your employees when you pay for them. It was like Henry Ford used to say, like, if what's good for the average employee is good for Ford because like they can buy the cars, right? And we've gone so far where it's like, we don't even need, middle America. Who cares about middle America? Send it to the rest of the world. So I think all those things are going to come back, and the pendulum's going to swing back hard. I just hope we invest in the growth side of things and the innovation so that we can take care of the social contract. You can have weight. My favorite thing about, if you watch CNBC and all these like pundits is like, oh no, wages are going up. Oh no. And you're like, dude, what do you mean? That should be a great thing. Like wages are going up. That's awesome. And they're like, no, it's going to burst the bond bubble. It's like, what boomer slop are you selling me right now? Oh, it's inflated. That means that they're going to have to raise rates. It's like, maybe growth is that good. And like, maybe I want to get paid actual interest on my money. Like, and now I'm making, say 4% in my checking account, but the dilution of the currency is 8%. I've been losing money for the past 10 years if I'm not investing in, assets out on the risk spectrum. The whole thing's ridiculous.
Yeah, and it has real social impacts, right, on the people themselves, and especially the youth who are growing up in this civilization where they don't see much hope of getting on that ladder that all the other generations ahead of them could. So, I mean, you talk a bunch about financial nihilism. We've got gambling, prediction markets, sports gambling, of course. Talk to us. What do you see? What's the logical end game of that financial nihilism?
Well, I'm worried it ends up in prediction markets, and then Jane Street and Citadel inevitably just take every incremental dollar from your middle class, lower class who's betting on stuff, because they can arb out all that inefficiency. They've been doing it in markets for years. So it's like picking up pennies in front of steamroller for them. They just slowly, they get more centralized, they make more money. And I'm worried that happens, and then you get some sort of revolution. I don't necessarily want that to happen, but like if you keep doing that and not reinvesting in your citizens, that's what's going to happen. And I think all these products, what I've tried to find in my career is like early in my career is like, how do you align your incentives as a citizen, as a father, as a husband, as, and also look at yourself in the mirror making money? It's like really hard. It's harder to do because the market's so centralized. Like you either have to go to a private company that's not profitable and then you get paid less and you're basically taking a flyer on your equity, or you go work at a mega corporation that's squeezing the middle class and offering them debt. It's a little bit generalized, but like, or if you're lucky, you're at like a cool semiconductor company that's producing real things, like not some social media mega, that's dividing and doing. It's really hard to align all those things. And for me, I was always working at a smaller shop that I can, my incentives are in line. I'm finding people messing with the system, and I'm also investing in stores of value for your middle class. Like, theoretically, like that's how I wrapped my head around it. But I don't know how it all shakes out. What did I digress there? What was the original question?
The financial nihilism of the youth, and what's the hope for them?
Yeah. So, I mean, I like to think there's new economies. These old institutions die. You have a deregulation where like you can start investing in new institutions that the next generation will actually admire, and their incentives are in line. Like right now, like no one really wants to work at like a giant bank or a giant, I don't know, whatever social media company. I think they want to invest in smaller, cool things that mean stuff. And we need to break down regulations to make that happen. Like one of the things is back in the day, you could start a hedge fund with $100,000 and there's no, hurdles to do that. And now you have to have all sorts of licenses, lawyers. You have to have like millions and millions of seed money to start it. So you can only do it, and that's all the regulation Bill Gurley has this great saying: "Regulation favors the incumbent." And you got to break that down, and so that the financial nihilism stops. There's one good thing about financial nihilism is that people are finding the frontier assets. They're investing in space. They're investing in a lot of those like very risk forward things. Crypto, I think, is a good thing because it's just a fee arbitrage in my mind is what crypto is. Is it disrupts the owners of fiat currency. So all those things, I think if you call that financial nihilism, I think those are good. What I think real financial nihilism is all betting markets and the selling of sports betting and sports gambling. That's non-productive, and it ends up in a giant centralized pocket. Mm-hmm. And I don't know those people that running them. They make a lot of money, but are you doing a good thing? And are you going to be? One of my quotes is the heroes of this generation are the villains of the next. Be careful what you want to grow and how you get rich, because I think eventually that's going to be frowned upon. All the shows that we watch now are very ostentatious, gaudy, people that the Real Housewives, the Kardashians, and it used to be about the Cosbys or Family Matters or all these middle class families. TGIF was about the family. Mm-hmm. And it's funny to watch that shift socially. And I think that's going to come back. And you can already see it. One of my big macro things is nihilism in general is in a bear market. I think people are looking for, religion, whatever religion it is. They want to actually believe in something, because the last 30 years they've believed in nothing, and now people are taking advantage of them. And so there's a giant slide back into if you don't believe in anything, if you don't believe in something, you'll fall for anything. Yep. Right. Mm-hmm. And that's, I think we're starting to see a reinvigoration from millennials, Gen X and Gen Zers on that front, which will disrupt as soon as the boomers get out of these power positions in Congress and in politics. It's going to be really interesting because I don't know one policy that's actually favored me. My childcare bill every month is absolutely absurd. Yeah, and that's something that the previous generations have no idea on. And you have a small daughter. It's egregious, but nothing's being done about that. And if you're looking to start a family, it's a major hurdle. Yeah. If your wage only goes up 3% a year in net of inflation, you're losing money already, and then you're going to have a kid. It's the math don't math. Yeah. So I get the nihilism is what I'm saying. It's I get going out on the risk spectrum, but I just hope we learn as a generation or next generation that you put it into something productive and not non-productive.
Yeah. And the government is so scared of the boomers losing any speck of wealth, right? Trump came out and said, no, we can't make more houses because that would make the housing prices go down, and then the boomers would lose out. So, I mean, it would be so beneficial for people in their 30s, 40s and below if there was some form of crash in the housing market, but that's just not allowed to happen.
I remember this specifically. I was working in San Francisco in 2018, and you remember when Powell raised rates and the market fell during Christmas? It was 25%. Bam, just absolutely annihilated. And I was like, oh my God, I'm going to actually be able to own a house. I was like, the boomers got to sell. Everything's going to reset, and within a month, Powell pivoted, lowered rates, and it just, the market just took off again. And I'm like, that's when I started realizing it's just a Ponzi. It's a Ponzi for boomers, and it's always going to be solved on the demand side, meaning look at Trump. He's buying $200 billion of mortgages. It's never going to be solved with, supply side where, okay, we're going to make it important so that housing prices drop and everyone can actually have equity in a house. We're going to incentivize builders and cut down all the red tape. So those cities that you live in where it's egregious, like Jersey City. Like when I grew up, they'd pay you to live in Jersey City. Now it's as expensive as New York City, and so like I think all those once that political will changes, we'll get some sort of benefits out of it. But until then, they will just keep bailing themselves out. And there's so many of them.
Yes.
It's so hard.
Yes.
Yeah.
And to keep this Ponzi going, they need more tax receipts, right? And that's one of the reasons why all these sin taxes are here now. Like gambling was legalized so they could get more receipts.
Yeah.
And so the government is obviously increasingly desperate. And what we just saw in Netherlands is that it looks like they're moving forward with an unrealized gains tax, right? So your stocks, your Bitcoin, your crypto is going to be taxed every single year, even if you didn't sell.
Is that's actually going through?
It's moving forward. Yeah. It's not signed into law yet, but it is going through the hurdles that need to be. And it looks like it's going to be passed.
And policies like that is why probably gold's going parabolic. Is if you sense that your country is doing that, you're going to go any store of value you could possibly have, you're going to go into, because that's extraction at that point.
Yeah.
And it's killing innovation. Like imagine what's the motivation to start a company or start anything? You're just going to take your capital and go somewhere else.
Yeah. And so do you think that's coming to America? And if so, what's the move? Do you move your family to a different jurisdiction or figure out some crazy wealth plan with tax shelters?
Yeah, that's a good. I feel great in Texas. I'm not gonna lie. Texas. I talk about this arbitrage all the time, but like, it's happening in California. You're seeing like the exodus of billionaires because, and think about Texas has I think a $30 billion surplus. They have zero income tax, and it's just a natural arbitrage. They're actually building housing. This housing supply is going up, so like you can live here within Austin, Texas, and drive to work, have a nice house that's reasonable 25 minutes outside the city, work at a great company. All the companies are moving here. I think it's more likely, I think Texas and Florida are gonna, in the middle of the country, it's just, they're gonna make policies for their citizens and you have to compete for taxpayers. Mm-hmm. What happens to California? I mean, like it's like Gotham. I lived there for 5 years, and I was crazy. I don't even know how it works. I used to say like, if the chief of police can't afford to live in the place he polices, there's a problem, right? Mm-hmm. If the principal at the school has to drive an hour and a half to work at the school that he lives in or she lives in, like that's a problem, and that's the social contract break. And I saw that like real time in San Francisco. Working a normal job there, you're losing money. Like, I don't know how, like if you work at like Starbucks, you have to drive in an hour or take public transportation in an hour. The inflation is absurd. And it just doesn't add up. And then you add in like what they're trying to do is just regulate more. You're seeing the flight, and I don't think it unwinds until the crime gets bad enough, and all there's also a whole money laundering scheme going on there, which like they say if you thought Minneapolis or Minnesota was bad, California is like exponentially bad. And most people live off the state. Like I shouldn't say most people, but a lot of people do. They're getting some sort of state assistance for votes, and I just don't know how that solves itself. I think eventually people just choose with their feet to live somewhere else. And we're starting to see that. Well, the interesting part is like, at what point as a boomer do you sell if you live in New York or New Jersey or Massachusetts or California? Because that's going to be fascinating. I have this theory or thesis where I'd much rather be long volatility assets, high volatility assets, than long, low volatility assets. So if you think about like the past 30 years, it's been about risk adjusted returns and the insurance model, like Buffett, right? He takes, everyone sells insurance, right? You have to buy the insurance and then you go invest in a bond. Mm-hmm. That whole premise it's a risk adjusted return. It's safe investing. But if you do that for a generation, you actually like sap your economy from innovation. There has to be people like Elon Musk that try to create new things instead of just arb things. And the last 50, 40 years has been about arbig things, like the labor arbitrage from China. Banking is an arbitrage. There's all sorts of arbitrages. There's very few people like actually investing in things that have never been done before. And that's where I'd love to get back to smartly. Like if you could figure out how to do that on a mental basis for America, I think that would be really healthy. And a lot of crypto people embrace it. Like that's what invigorates me is like initially with crypto is like there are way smarter people in crypto than there are in regular finance. And they're diverse too. Like you study philosophy, like you've studied a lot of different things, and that's how they've come to crypto. Most people in finance just studied finance.
Yeah.
And so they don't know history. They don't know all the different, and therein lies why they're just highly paid, factory workers in a lot of senses. And so I don't know. I think I'd much rather be on that side.
Yeah. And it goes to what are we measuring? Right? GDP has been the holy metric of the last 100 years, saying if as long as that number goes up, life is getting better. But now we're in a completely different realm when it comes to tech and everything else. So what is GDP for in your view now? Oh,
it's just paying off debt. It's just, you just jimmy the GDP higher so that you can lower the debt for sovereigns. But in that you do... The biggest piece of advice that I could have given myself 20 years ago is go work at a company and get paid less in an industry that's growing. Like if I was starting out right now, I'd go try to go get a job at one of these like small modular reactor companies that does like, nuclear or robotics or autonomous driving. I would try to work in something that's growth oriented because instead of getting into like a commoditized industry or crypto is like, I did try to work in the crypto industry for a while, and then I had a couple kids and I was like, it's not coming to fruition too fast. But so I don't know. That's where I would put my chips if I were the next generation.
Yeah, and speaking of that, you've got kids, and so looking 10, 20 years down the road, do you see a brighter future for America? And what advice would you give other than work in a growing industry to the youth? What would you say to them?
Yeah, it's funny is like Muddy Waters is an activist short seller, but like I'm a pretty optimistic person. And I would say, I think things are going to get better. I think if you get some generational turnover and you get some real people and not just like corporatists and, bought out politicians saying real stuff, you'll get like, when someone says something, you're like, yeah, I'll ride with you. Like, I think there's a lot of those people in the next generation that their voices are just stifled and we haven't really heard from them. And the hard part is that, technology has invaded all of our lives where giant centralized interests. I mean, they know your search history on your browser. They know every place you've ever been in your life. They probably know what, the paper you wrote in like 8th grade. So that part is a little scary to me where everyone can be co-opted or someone you love can be co-opted. But I think at some point, some strong leader will rise that like unites America and, it can really like reinvigorate the American spirit. Because right now it's like, it's so depressing. You watch this stuff and you're like, give me something, man. Give me something real.
Yeah.
On both sides.
Yeah, the narrative needs to be refreshed, right? The story from World War II has sort of... it's done, right? The kids these days don't have no attachment to that whatsoever. And so the idea of a rules-based order in America, we're the good guys and we're fighting against fascism and we must send democracy everywhere. That story's over. We need a new story, and that will hopefully unite us into a brighter future.
I couldn't agree more. It does make me a little nervous when I see, like the Nick Fuentes of the world is like, World War II, who cares? And 'cause that, you're right. You're so right about that, where we need a new story. We need a new battle in a lot of sense. And I think maybe it's, reinvigorating space. Like, I think that's why space is it's always the final frontier. But like, if you can make kids want to go in and explore things.
Yeah.
And maybe there's an astronaut or I don't think Musk is the guy. He's kind of weird, but there's got to be somebody else that we can kind of admire and be our hero.
Yeah, because it does seem like we're in this race, this Ponzi debt trap versus infinite productivity, which is going to win out first. And it puts us in a weird situation where every single day is a new headline, a new situation where you just don't know what's going to come up next.
Yeah, and that's a great framing right there, because I think there could be a dystopia where the politics and the corporatism take over, and we're just in this weird feudalism. Like, I did an interview with Harris Kupperman. He calls it like, modern day feudalism, because we don't really realize we're living in that, but we are in a lot of senses. Few people can utilize the technology to make it out, but a lot of people just, if you have a lot of student loans and that you're subservient to the system, and it doesn't serve your interests as much. You can't take those risks when you have $200,000 of student loans.
Yeah.
You can't, if you're a doctor, like, you're buried in loans. Like, it's really bad. So, I hope that side doesn't win and they figure out how to grow fast enough to get out of the debt and, create new things.
And that's what drew me to Bitcoin in the first place, is the hope that it gives you, right? That you can outrun this crazy inflation and get rid of your debts and be a free sovereign individual on solid financial footing. So Bitcoin, while it might be stuck in this band right now, I still believe that it is the one asset that can really guarantee that for my generation.
I'm with you. It's been a blessing for me, and I'm lucky to have 3 children, and being able to afford that is largely, Bitcoin played a large part in that. And I really, hopefully quantum doesn't ruin the whole thesis and it doesn't unwind. But I agree. I think the philosophical nature of Bitcoin is a really powerful thing. And, long term, I think that all those, if you're talking about good and evil, I think it wins.
Let's go. All right. We got to end on that note of hope right there. That's absolutely it, man. Yes. It's just such a weird world. And to be at this point where we are, just I have this perspective of looking at markets, looking at geopolitics with this birth of AI and Bitcoin at the same time. Mm-hmm. It's hard to wrap your head around, but that's what we do here. We talk about it and try to give people some insights into what's actually happening. So Tyler, I really appreciate your time. If people want to find more about you, the podcast, everything you're doing, where should they go?
Twitter is the easiest way. Hit me with a DM. It's at Tyler_Neville_. But thanks for having me, Rob. It was really, really good question, or great questions, great conversation. And I'd love to do it again sometime. And that's it.
Cheers, man. Yeah. And if you like this conversation, definitely follow Tyler. It's all this kind of stuff.
Yeah. Sorry about all the ranting.
That's the point. That's the point. Yeah. That's why we're here. Cheers. Thanks for making it to the end of the video. If you could drop a like and a share, it would help in our mission to accelerate adoption. If you're looking for more Bitcoin signal, join over 10,000 readers of our newsletter, Bitcoin News Weekly. Every Monday morning, we send out the biggest headlines of Bitcoin to keep you in the know in under 5 minutes. Links below in the description. Then come hang with us live every Monday at 11 a.m. Eastern. We break it all down live on stream with a new guest, and you can add your 2 sats in the chat. See you next week.